Welcome! With the autumn budget on the horizon, there's a lot of chatter about tax changes. But what could that actually mean for you and your wallet? Well, in this guide, we've teamed up with the absolute experts at Pro Tax Accountant to break down all the potential changes for 2025/26. More importantly, we're going to give you some real practical tips to stay ahead of the curve. All right, let's just jump straight in, shall we? Here's a question that really gets to the core of it all. For millions of people across the UK, the answer is, believe it or not, a surprising yes. And it's often thanks to something sneaky called stealth taxes. So, you might be asking, why is this happening now? Honestly, it all comes down to this one staggering number. This is the UK's projected fiscal gap by 2029/30. And to close that gap, you guessed it, the government is looking at all sorts of tax changes. So let's explore what that could really mean for your bottom line. So what's all the buzz about? In this first section, we're going to unpack exactly why tax has become such a hot topic and look at the stealthy ways your finances could be affected without you even realizing it. Okay, so the Chancellor has been pretty clear, right? No big headline-grabbing tax rate hikes on income, national insurance, or VAT. But, and this is a big but, that doesn't mean your tax bill won't go up. Nope. The focus is on these smaller, more subtle changes to things like thresholds and allowances, and they can have a massive impact on your take-home pay. Let's kick things off with how this could affect your paycheck. Right, this next bit is all about how these potential changes could directly hit the money that actually lands in your bank account each month. We're talking about your salary, your take-home pay, and the hidden forces that can seriously shrink it. First up, let's get to grips with a term you're going to hear a lot: fiscal drag. The best way to think of it is like this. You get a well-deserved pay rise, but the tax goalposts don't move an inch. So even though you're earning more, a bigger chunk of your income gets dragged into being taxed, sometimes even at a higher rate. It's basically a tax hike in disguise. So here are the tax bands for the 2025/26 tax year. Just take a second to look at these numbers. You'll notice straight away that the system in Scotland is, well, it's quite different. It has more tax bands and the higher rates kick in a lot earlier. This means if you're a higher earner in Scotland, you could be paying a whole lot more in tax. Now let's see what this looks like in the real world. Let's make this real. Imagine you earn £45,000 in England. Your tax bill is roughly £6,486. But then, fiscal drag kicks in. Just $1,000 of your pay rise is now taxed at the basic rate instead of being tax-free. Boom, that's an extra £200 straight to the taxman. It might not sound like a huge amount, but these little bits add up to billions for the Treasury. So the key takeaway here is to take control of what you can. And your first step should be checking your tax code. Here's a little pro tip for you. Did you know around 2.5 million tax codes are wrong every single year? An error could literally be costing you hundreds. The standard code is 1257L, but if you see something weird like 0T, that's a massive red flag. It means you have no personal allowance and you need to get that fixed fast. Okay, now for all the freelancers, contractors, and business owners out there. You've got a completely different set of challenges and, let's be honest, opportunities. So let's dive into how all these changes could affect you. If you're self-employed, deductions are your absolute best friend. Seriously, every single pound you claim in expenses is a pound you are not paying tax on. And you would be shocked at how many people miss out on common deductions like mileage or using the simplified flat rate for their home office. You're essentially just leaving money on the table for HMRC. Wow, okay, this slide really puts it into perspective, doesn't it? The power of deductions is huge. Jonathan Hargreaves at Pro Tax Accountant breaks it down for us. Finding just £5,000 in expenses could save you nearly £1,500 in tax. Think about that. And something as simple as tracking your mileage properly, that could put hundreds of pounds right back in your pocket. It's a no-brainer. And look, this isn't just theory. Take Fiona, a freelance graphic designer from Cardiff. She was looking at a surprise tax bill of £1,800. But after a quick review, she realized she'd completely forgotten to claim for her design software subscriptions and a training course she'd done. By claiming those totally legitimate expenses, she pretty much wiped out that entire bill. All right, let's shift gears and focus on long-term planning. This is where some of the most significant changes could be coming down the line, potentially altering the very way we build wealth and pass it on to the next generation. So here are some of the key areas on the Chancellor's radar. Salary sacrifice schemes, they could be capped. The rules around gifting money to loved ones, also under the microscope. And it's already confirmed that from 2027, your pension pot will be included in inheritance tax calculations. This is a big, big deal. So stay with me, because this next point about gifting is absolutely crucial.
One of the biggest potential shifts is something called a lifetime gifting cap. Try to imagine a running total of every major gift you give throughout your entire life. Once you hit a certain limit, let's say it's £100,000, any gifts you make after that could get hit with an inheritance tax bill. This would be a huge shakeup from the current system.
I mean, it's a massive contrast to the current 7-year rule, right? Right now, you can give away as much as you like, and as long as you live for 7 years after making that gift, it's completely outside your estate for tax purposes. The future of this rule is now really uncertain, which makes proactive planning more important than ever.
Okay, so with all this potential change swirling around, what can you actually do right now? Well, you don't have to just sit there and wait to see what happens. This section is your practical, hands-on action plan to get ahead of any changes and make sure you're not paying a single penny more in tax than you absolutely have to. First things first, like we mentioned, check that tax code. Here's a simple 3-step check you can do today. A client of ProTax accountant Raj from Coventry did exactly this. He found out his code hadn't been updated after a change in his benefits, and he managed to reclaim over £1,000 he had overpaid. It is so worth the 10 minutes it takes.
Now, if you've got multiple income streams, maybe a side hustle or some rental income, this is an absolute must-do. It's so important to get a clear picture of your total earnings to avoid a nasty surprise from the taxman. But that's not all. Here's where most people go wrong. You need to be proactive and tell HMRC about your other income, because their systems can take a long, long time to catch up. Phew, we've covered a lot of ground, haven't we? From fiscal drag to lifetime gifting caps, navigating this whole landscape can be really complex, especially when the rules might be about to change. But the good news is you don't have to do it alone. As we begin to wrap this up, this is really the key question you need to ask yourself. Is your financial house truly in order? Are you absolutely sure you're making the most of all of the allowances and reliefs you're entitled to? Because being proactive right now can make a huge difference to your financial future. Look, if you're feeling even a little bit overwhelmed by all of this, you are definitely not alone. The team at ProTax Accountant is here to help. They can give you personalized advice that's tailored specifically to your unique situation, so you can feel confident that you're making the best financial decisions. And just a quick but important reminder, the information we've discussed today is for general purposes only and really shouldn't be relied on exclusively to make financial decisions. Before making any decisions, you must consult the tax experts at ProTax Accountant. You can get in touch with their fantastic team via WhatsApp or phone on 07985 689912, or just drop them an email at info@protaxaccountant.co.uk. For a more detailed read on this topic, check out the full article on their blog at protaxaccountant.co.uk. And finally, please subscribe to their YouTube channel to stay informed.